Welcome friends. Now we are starting a knowledge capsule on changes in Cenvat Credit Rules 2004 Wide Union Budget 2016. Cenvat Credit Rules 2004 is issued under Section 37 of Central Excise Act 1944 and under Section 94 of Finance Act 1994. There are three important notifications which is amending Cenvat Credit Rules. It is initially 13/2016 dated 1st March 2016 at the time of budget. Then it's duly amended by 23/2016 dated 1st April 2016 and subsequently got amended by 24/2016 dated 13th April 2016. Cenvat Credit Rules is being provided to allow Cenvat credit on input services and capital goods used for manufacturing of final products or for provision of taxable output services. But there are restrictive meaning within the definition of input and input services. When negative list regime of service tax was introduced from 1st July 2012, a common code committee was formed, and this common code committee has taken representation from trade, industry and commerce. This rule was supposed to be simplified and liberalized, but it was not done in the past. But Wide Union Budget 2016, of course, the government has taken initiative to liberalize it, rationalize it, simplified it. But there are certain other points which is alarming, which we will discuss while discussing changes in Cenvat Credit Rules 2004. We are going to discuss all changes rule-wise. Let's start with Rule 2, Sub-Rule A, Capital Goods. Now, capital goods includes wagon, falling under Chapter heading 860692, along with all goods falling under Chapter 82, 84, 85, 90, 6804, 6805. Subsequently, you would be knowing any appliances or equipment used in office premises of factory, credit is not available. But now this is done away with. Credit would be available even on equipment and office appliances. Subsequently, if capital goods which is installed outside the factory for generation of electricity is now being allowed for pumping of water also. So, any capital goods which is installed outside for generation of electricity or pumping of water which got inserted from 1st April 2016 for captive use in the factory, credit would be available. Now moving to Rule 2, Sub-Rule E, exempted service. This is important because we can't take credit of input and input services used for exempted service. But exempted service should not include first item which was already there, export of services in terms of Rule 6A of Service Tax Rule 1994. Along with this, now new entry got inserted. What is this? Transportation of goods by vessel from a custom station of clearance in India to a place outside India, which is otherwise not taxable in terms of Rule 10 of POP rules, place of provision of services rule. Because in terms of Rule 10, it is place of destination of goods other than mail, courier or GTA. So, whenever goods are destined to a place outside India, it is a non-taxable territory. Hence, service tax not applicable. So, it may be assumed it is exempted service, but now excluded specifically. Thereby, the domestic shipping line need not require to reverse Cenvat credit on input and input services received and used for provision of such kind of services. It will not be out of place to draw your attention there is one specific entry under negative list of services. 66D, subclause P, Roman 2. Any transport of goods by aircraft or vessel from a place outside India to first custom station in India. This particular entry is going to be omitted from 1st June 2016, meaning thereby service tax would be applicable. Pertaining to this, a new entry 53 got inserted in mega exemption notification 25/2012. So whenever transportation of goods happening by aircraft, service tax is exempted, but whenever it is happening from vessel, service tax would be applicable, that too in the hands of business entity. So any business entity in India receiving services from foreign shipping line, they have to discharge service tax liability under reverse charge mechanism. This is a matter of debate and discussion, because freight is already included in valuation for imported goods for discharging custom duty. Now freight is also being made chargeable to service tax, so there would be double taxation. Though it is being stated the service tax paid on freight component, credit would be available, but what happened for the importer, pure importer who is a trader of goods, they will not be able to take credit in that regard. So that is called double taxation. So this issue is being debated and discussed, why such kind of provisions are being made where double taxation coming into the picture. Moving forward, rule 2, subrule K, inputs. Inputs includes all goods used for generation of electricity or steam or for pumping of water. This pumping of water, you got benefit in capital goods definition. Here also it is provided under definition of input. Subsequently, all capital goods having value up to 10,000 rupees per piece, credit would be available 100% in the year of purchase. Otherwise, capital goods credit 50% in the year of purchase, 50% in subsequent years. But capital goods up to 10,000 rupees per piece, credit would be available in the year of purchase itself. If this capital goods is being finally accounted for as a fixed asset or capital goods in terms of Income Tax Act, then you are also allowed to avail depreciation along with 100% credit available on excise duty component. Otherwise, you know that capital goods excise duty component, if availed as a Cenvat, no depreciation benefit can be taken in that regard. So there is a departure for all capital goods up to value of 10,000 rupees per piece. Good one. Now moving forward to rule 3, subrule 4 of Cenvat Credit Rules 2004. This rule says infrastructure cess, which is applicable on motor vehicle falling under chapter heading 8703, applicable from this Union Budget 2016. No credit would be available for infrastructure cess, and neither Cenvat credit can be used for payment of infrastructure cess. Hence, this infrastructure cess to be paid in cash. That is one part of it. But there is another point coming out. What happened if motor vehicle returned to the factory for remade, reconditioning or refine, an activity undertaken by manufacturer as a manufacturing activity, and after that it is again being removed. So when this motor vehicle returning to the factory, credit will not be available of infrastructure cess, and subsequently after manufacturing it is going out, again we have to pay infrastructure cess. To that aspect it would be double taxation, which need to be corrected. Now moving to rule 4.2a, explanation. We all know any SSI unit enjoying value-weighted exemption, they are allowed to avail 100% credit on capital goods in the year of purchase. Now jewellery sector under excise net at the rate of 1% without Cenvat credit on input and capital goods, credit would be available for input services, or 12.5% with Cenvat credit facility. So any SSE falling under jewellery sector under chapter heading 7113 having aggregate value of clearance of exciseable goods in preceding financial year less than 12 crore rupees, they can avail 100% credit of excise duty paid on capital goods in the year of purchase. This is what being prescribed. Now moving to Rule 45B. Rule 45B says any item, jigs, mold, dies, fixture. This can be sent directly to job worker premises without bringing to own premises, and credit can be availed by the principal manufacturer. Now along with that, tools falling under chapter 82 got added. So tool can also be sent directly to job worker premises for manufacturing of final product on behalf of principal manufacturer, and principal manufacturer can avail credit without bringing the same into its own premises. Coming to Rule 4, Sub-Rule 6. Any order of Deputy Commissioner or Assistant Commissioner for sending input or partially processed input for manufacturing of final product and then clearance thereof from the job worker premises on payment of duty. The validity of such order was 1 year, which is now increased to 3 years from 1st April 2016. Now moving to Rule 4, Sub-Rule 7. This rule is very, very important. Why important? Let's understand the context first. We all know that government want to levy service tax on any service provided by way of assignment of right to use of natural resources. So service tax would be payable, and we would be knowing any service provided by government or local authority to business entity, it is reverse charge liability from 1st April 2016. So Rule 4, Sub-Rule 7, there were initially 3 sub-proviso inserted, Rule sub-proviso 6th, 7th and 8th, which was initially proposed in Cenvat credit rules applicable from 1st April 2016, which recently got amended by notification number 24/2016. And what is the crux? Let's listen to that. If service tax paid on any assignment of right to use of natural resources by government or local authority or any other person, either you are paying upfront or deferred payment, credit would be spread evenly over a period of 3 years. Initially, it was supposed to be over a period of right to use. So this is a good change. Subsequently, if there is subsequent transfer or further assignment, then whatever credit is not availed, then that credit can be availed in the year of subsequent transfer or further assignment, subject to maximum of service tax payable on consideration for subsequent transfer or further assignment. To understand this provision, let's take example so that we can understand. Let's say that the 10 crore rupees payable for assignment of right to use of natural resources for 20 years, and rate of service tax applicable, let's say 15%. So initially provision was that 15% applicable on 10 crore, 1.5 crore service tax payable, that will be spread over right to use, which is 20 years. Now it is being liberalized by amending proviso 6th of Rule 4, Sub-Rule 7 by notification number 24/2016. Now it says this credit would be spread evenly over a period of 3 years. Good and laudable change. At this cash flow which is going to be hit to this particular sector is now being taken care of. Now let's say it is subsequently transferred. Let's say it is subsequently transferred in year 2. So you are left out with 1 crore rupees which you have not availed. So this credit would be available to you in subsequent year of transfer, subject to maximum of service tax payable on consideration for further assignment. So let's take 2 examples. Further assignment happening for 9 crore or it is happening for 3 crore. If it is happening for 9 crore, 15% rate applied, liability would be 1.35 crore, but you can avail only to the extent of 1 crore, which is not availed by you when you pay service tax in the initial year. In case of 3 crore, liability would be 45 lakh rupees. So your credit availment would be limited only up to 45 lakh rupees, though you got 1 crore rupees to be availed, meaning thereby 55 lakh rupees eventually is a loss and cost to the provision of services in your books of accounts. This is for the subsequent transfer. Now, how to avail credit and how credit would be availed in subsequent transfer or further assignment. Board has issued a circular dated 13th April 2016 explaining how the credit to be availed and subsequently spread over a period of 3 years in case of deferred payment, how credit to be availed. This particular principle is being explained while discussing service tax payment made on assignment of right to use of natural resources by government, local authority or any other person. Subsequently, if you make periodic payment, in that case like spectrum user charges, royalty, service tax credit would be available in the year of payment itself. There is one more amendment made in Rule 4, Sub-Rule 7, 5th proviso. It says time limit for availment of credit is 1 year for input and input services. Now this service tax paid on assignment of right to use of natural resources, which is spread evenly over a period of 3 years, this time limit of 1 year will not be applicable. That is what 5th proviso of Rule 4 Sub-Rule 7 got amended. So this particular component is discussed at length, Cenvat credit, but how the taxability would be. Service tax applicability in the hands of business entity when they are getting services from government or local authority is being explained in our another knowledge capsule, which you can watch for detailed analysis. Moving forward to Rule 6. Rule 6 definitely got rationalized and simplified. Before discussing the changes proposed from 1st April 2016, let's look at the rule, erstwhile rule, what it says. Rule 6, Sub-Rule 1 says, no Cenvat credit on input and input services used for exempted goods and exempted services. Sub-Rule 2 says, if separate books of accounts maintained for input and input services, then to the extent of it is used for dutiable goods and taxable output services, credit would be available, meaning thereby credit is not available on input and input services used for exempted goods and exempted services. Sub-Rule 3 says, if SSC is not able to maintain separate books of accounts, then he has to follow 3 options. The first option, pay 6% on value of exempted goods or 7% on exempted services. This 7% made effective from 1st June 2015 when service tax rate changed from 12.36 to 14%. Or option 2, Rule 6.3a, formula based. It is thereby that input and input services used for exempted goods and exempted services credit will not be available. Option 3, Roman 3. It says for inputs you can follow separate books of accounts under Rule 6 Sub-Rule 2. For input services you can follow Rule 6.3a. Now this is all rationalized and simplified. And what new rule says now? New rule says Sub-Rule 1 of Rule 6 of Cenvat credit rules. It says on same principle, no Cenvat credit on input and input services used for exempted goods and exempted services. But this payment and calculation to be done as per Sub-Rule 2 and Sub-Rule 3 of Rule 6. Sub-Rule 2 says that if any input and input services exclusively used for exempted goods and exempted services, credit will not be available. Sub-Rule 3 of Rule 6 says there are 2 options given. The first option, pay 6% on value of exempted goods or 7% on exempted services. Option 2, formula based, Rule 6.3a. Let's discuss the option 1, wherein we have to pay 6% on exempted goods, 7% on exempted services. It would be subject to maximum of sum total of opening balance of Cenvat credit on input and input services for the period to which payment relates, and Cenvat credit taken on input and input services for the period relates. This taken got amended by notification number 23/2016 dated 1st April 2016. Initially it was Cenvat credit available on input and input services at the end of the period to which payment relates. Now it is being clarified, it is credit taken along with opening balance of Cenvat credit on input and input services of the period to which payment relates. This is laudable change, appreciated change. We have seen in the past the calculation of 6% or 7% has gone much higher to the credit taken on input and input services, and dispute persists, litigation going on. But this change is applicable only from 1st April 2016. So this safety cap which is coming in applicable only post facto 1st April 2016. So question may come, what happened for the past period? It is highly advisable that government should have amended the rule and provided some transit provision even for the past period. Nevertheless, now move to next option which is provided under Rule 6 sub Rule 3 of Cenvat credit rules, which is formula based Rule 6.3a, and principles are: if any input and input services used exclusively for exempted goods and exempted services, no credit would be available. If any input and input services exclusively used for dutiable goods and taxable output services, 100% credit would be available. Thereafter, whatever left out is the common input and input services. If it is used for exempted goods and exempted services, then to the extent of turnover of exempted goods and exempted services divided by total turnover, provisionally credit to be reversed, which can be finally calculated and accounted for by 30th June of succeeding financial year. If there is differential liability to be paid, it would be paid along with interest at the rate of 15%. But in case you have excess reverse, then suo motu credit would be available. Pertaining to this particular rule, there are certain important provisions which we should keep it in our mind. Transportation of goods or passenger by rail, reversal would be 2% as against 7%. Subsequently, if any of the option adopted under Rule 6 sub Rule 3, it should be uniformly followed for all exempted goods and exempted services during the year and should not be withdrawn during the year. Going further, Rule 6.3 AA, it talks about that if you have not followed particular option and not calculated amount in terms of Rule 6.3a, then you can pay Cenvat credit in terms of Rule 6.3a with interest of 15% liability. For following Rule 6.3a, there is a provision intimation to the superintendent also required of certain particulars. Going further, Rule 6.3b, any bank, financial institution, non-banking financial company, they are being allowed to follow Rule 6 sub Rule 1, sub Rule 2, sub Rule 3 in addition to 50% reversal of Cenvat credit when they are providing services by way of extending deposit, loans and advances. Rule 6 sub Rule 4, again this is the alarming one. But before touching this one, let's come back to the Rule 6 where exempted service is one of the component, and we want to draw your attention. The explanation 3 and 4 inserted after Rule 6 sub Rule 1. And what this explanation says, exempted service includes an activity which is not service in terms of definition provided under section 65B subsection 44 of Finance Act, meaning thereby if any activity which is not service, it is a exempted service and reversal of Cenvat credit required on input and input services used for providing such activity is too wider. Now try to understand what is the implication of it. It's an alarming one for all of us together. Let's say you provide service without consideration. It is not activity for consideration, it's not service, but it is now exempted service. So common input and input services used for the provision of such activity, reversal need to be done. So what would be the valuation? They say valuation would be as per agreement, contract or invoice value. If it is not available, then it is as per reasonable method in terms of valuation provision provided in Finance Act 1994 or rules made thereunder. But this is a big Pandora box. Let's take another example so that you can understand in a better way. A builder in 2016 constructing 100 flats. So he is entering into contract before completion for 80 flats and 20 flats after completion of certificate only after 2019. So now you are availing credit on input and input services, but for builder you must be knowing if you are availing abatement notification or you are following rule 2A service tax determination valuation rule, no credit on input. Credit is available only on input service and capital goods. Now having understood that, now try to understand that you are allowed to avail credit on input service. Question is, what happened for 20 flats which is being sold out after completion certificate? It is excluded from the definition of service itself because transfer of title and immovable property by way of sale, gift or in any other manner is not service. Hence, we need not require to, but with this explanation, this is need to be included in exempted service and reversal to be done. Question comes, something which is happening at a future date in 2019, how can I reverse in 2016 and how I would be knowing that exactly 20 flats are left out which are going to be sold out after completion certificate, and what would be the valuation? Big Pandora box is opening up. But let's see what is the intention of bringing such activity which is per se not service. If it is not service, how come it is exempted service? But this is a big question for all of us together. Now moving to rule 6, sub rule 4. No Cenvat credit of excise duty on capital goods used exclusively for exempted goods and exempted services for a period of 2 years from date of commencement of production or provision of taxable output services. So there is a bar coming in. If it is exclusively used for 2 years for exempted goods and exempted services, credit will not be available. Like similar 1 year time limit to avail credit on input and input services, bearing one particular fifth proviso got amended only for assignment of right to use of natural resources by notification number 24/2016. Rule 6, sub rule 7. It says there is no reversal required in terms of rule 6, sub rule 1, sub rule 2, sub rule 3, sub rule 4 for any service provided by way of transportation of goods by vessel from a customs station of clearance in India to a place outside India. It will not be exempted service. On similar line when service provided to SEZ, SEZ developer or export of services in terms of rule 6A of service tax rule 1994. Now we are moving to input service distributor. Rule 7. ISD can distribute credit to its own manufacturing unit or unit providing taxable output services. Now laudable change. ISD can now distribute credit to outsourced manufacturing unit also. And who all are outsourced manufacturing unit? A job worker who is manufacturing goods and paying duty in terms of rule 10A of Central Excise Valuation Rules 2000, or contract manufacturer who is manufacturing goods under brand name and discharging duty under section 4A of Central Excise Act 1944. So ISD can distribute credit even to outsourced manufacturing units. Question comes, what happens if contract manufacturer manufacturing goods under brand name and discharging duty under transaction value which is not covered? It is proposed it should also be included in outsourced manufacturing unit. Now this outsourced manufacturing unit getting credit from ISD, they should maintain the separate account, and this ISD credit to be used for discharging excise duty liability for goods manufactured on behalf of ISD. And to the rider, that credit standing on 31st March 2016 should not be distributed to outsourced manufacturing unit. Here another point which is coming up, let's say service is received prior to 31st March 2016, but credit is availed only after 1st April 2016. Can ISD distribute this credit to outsourced manufacturing unit? This is another point which can be looked into. Now, manner of distribution of credit as provided under Rule 7R. If credit attributable to a particular unit, it should be distributed to that particular unit only. If credit attributable to more than one unit but not all, then credit should be distributed to all such unit. If credit attributable to all unit, then credit should be distributed to all unit. And another important point which we should keep it in our mind, that Rule 6 reversal provision would be applicable now to manufacturing unit or unit providing taxable output services and will not be applicable to ISD unit. These all are provision from ISD perspective. Now there is a new Rule 7B got inserted. It's a good and laudable one. Any manufacturing unit having multiple unit of manufacturing, they can maintain common warehouse for input, and from this common warehouse they can distribute inputs to their respective manufacturing unit and transfer the credit on such input distributed to the manufacturing unit on similar line invoice raised by first stage dealer or second stage dealer, of course the good one. Moving to Rule 9(1)(a) Roman 1. Now service provider can raise invoice for inputs and capital goods on similar like manufacturer, and that would be eligible document to avail the credit. Rule 9(a) now proposed annual return for service provider and manufacturer that need to be filed by 30th November of succeeding financial year in a form to be prescribed. Joint Secretary TRU later talks about now Central Excise SSE who are filing 27 excise return now limited to 13 Central Excise return, 1 monthly return and 1 annual return. Service tax SSE who is filing 2 half yearly return, they are supposed to file 3 return, 2 half yearly return and 1 annual return. Last and foremost, Rule 14 Sub-Rule 2 FIFO, first in first out provision which was brought last year Union Budget 2015 is proposed to be deleted, omitted. What is first in first out? The provision was if you avail any ineligible credit, then that will be assumed that used first, so that interest is applicable even on wrong utilization in terms of Rule 14. Now this FIFO system gone. So precaution required for all SSE. If they are availing ineligible credit, then they should have enough balance in their Cenvat credit account and they can say they have not utilized the ineligible credit, hence interest provision will not be applicable in terms of Rule 14 of Cenvat Credit Rules 2004. So we have discussed at length all the changes in Cenvat Credit Rules 2004 with alarming point coming out. Overall, the Cenvat Credit Rules has provided simplification, rationalization, but kept certain issues open. It would have been wiser if government would have also simplified definition of input services which was not touched upon in this Union Budget 2016. So in case you are having any further query pertaining to any changes in Cenvat Cadet Rules 2004, we invite your suggestion and feedback. And for further improvement of our knowledge tube, which we are publishing on different topic, your suggestions are welcome. Thanks for watching this knowledge tube on changes in Cenvat Cadet Rules 2004. Thank you very much.